Hey guys, in this video, we're going to talk about options leaps. We're going to go over what they are and why anybody would actually, in their right mind, want to play options leaps. Now, what it stands for, leaps, it stands for long-term equity anticipation. And all an option leap is you're playing an option or option strategy that is longer dated than 365 days out. So that is 1 year from the day, and those are considered an options leap. So you're thinking really, really long term here. So very, very low theta. So the question is, why would anybody want to play this strategy? Well, obviously, it's long term strategy. And if you'll notice, Nancy Pelosi has also been playing these, and all the big guys have been playing these in the background for quite some time now. Okay. So all it is you're placing something a year out. So we can go in here, we'll open up our September 2022s. You can still see there's actually volume here. You would think that, something, even though it's Apple, it's really liquid, you wouldn't have a whole lot of volume, but you really do. And your spreads, I mean, they're a little wide, but really nothing crazy, only 30 cents here. So what you're doing is, obviously it's long-term. You want Apple to go up. If we're just going to purchase a call, we'll purchase this at the money call here, the 150s. That's where all your volume is. 30-cent spread, we'll take a little bit of slippage. That's fine with us. Your delta is at 55. So even though we are out of the money here by about $1 or so, your delta is above 50. So that's also something that you need to note. But it's also, the only caveat is when you're trying to purchase something here, you know that you're going to be paying a lot for it, right? But it's kind of hard to grasp IV. So it's hard for brokerages to kind of, I guess, speculate on the IV. So even though it does say 33-cent expected move by next year, basically, with a raw IV of 34% up here in your top right, that's still, it's kind of hard to gauge that. So you have to take this with a little bit of a grain of salt. Whereas rather, if you're looking at the weeklies or even monthlies or a couple months out, you kind of know where that speculation is and where everything should be trading. When you go longer than basically 6 months out, it's kind of hard to gauge all that volatility. But for right now, use this 33 cents, but kind of use that with a grain of salt as well. But anyway, we know that we're going to not overpay. We know that we're going to pay a lot for these contracts, which is fine. But the goal is, when we're playing these leaps, not only do we want the stock to keep going up, right? So obviously we get a larger move here. We get a $10 move in the next couple of weeks in Apple. Well, yeah, well, we're going to be deep in the money, etc. But you don't necessarily want to just have the stock go up and then you want to sell this option. What you really want to do, and what people use these for a lot, is that they actually exercise them before the expiration date. So you'd be purchasing the 150s here. All of a sudden, we're going deep in the money. We're down here in the or not down in the 120s. The stock shoots up, let's say up to the 170 mark, and you know what I mean? Our delta turns into about 75 delta, and from this 55, we're up around 2 grand. Well, instead of just selling that and keeping the 2 grand profit, people actually utilize these to actually get long stock. So it's a cheaper way to get long stock, especially if Apple keeps on going up, because who knows what's going to happen between now and next year. If we get into, let's say, June or July of next year and Apple's trading at $200, well, we can just exercise and all of a sudden we're buying Apple at 150, right? And it only cost us, you know what I mean? The option only cost us 1,700 at the moment, and we're exercising it down here when it is worth like 4 grand, you know what I mean? So people utilize these to basically get long stock. When you're playing that far out, you're not necessarily playing volatility. You're not necessarily playing quick, sharp moves. You're definitely not playing theta, because there's not a whole lot there, because you have so much time built into these options before they do expire. So what you're doing is, more or less, you're trying to get a nice move in the underlying and then either sell for a profit, or you're just trying to trying to exercise those options. So that's basically what options leaps are. How they act is basically, obviously, your theta is going to react a whole lot slower because you have so much time built in here. So if you're trying to sell puts in here that far out, it just wouldn't be worth it. Really, 45 to 60 days to expiration is when you want to start selling, because that's when theta really starts to kick up. right? So that little curve that you get from 60 to about 21 days, right in there, that's when your theta really kicks up. And then obviously after 21 days, it just shoots up, but then also you have higher gamma risk, etc. And really from 60 days up until, I mean, a year and 6 months out, really not a whole lot of anything in there on your theta. So if you are selling leaps, I would probably suggest not doing that, just because you're going to have to wait so long to realize those profits, unless you get a really, really fast, sharp move. And then also, if you get that sharp move on the downside, your volume might not be there where you can get out, or, you know what I mean? It goes on and on. But anyway, when you're playing these leaps, they are going to be a year dated out till expiration. So it's going to be, your data expiration is going to be above 365 days. And then the whole goal basically is that you are going to try to get assigned, or I'm sorry, you are going to try to exercise that option to get long stock in there for cheaper. Okay, guys, thanks for watching. Make sure to check us out on our social media. We have attached links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.